Hello and welcome to my morning note. Be prepared to feel the intellectual might of MIT this week. The Massachusetts Institute of Technology's Sloan School of Business is in London presenting some vitally important new ideas about finance. Today, what I'd like to take a look at is the degree of connectivity in the world credit system. We all learned in the credit crisis that there were multiple feedback loops that hadn't been totally understood. How do you measure them? How do you understand them so that you can then deal with them in future? That is the very big task that is now being undertaken by a team at MIT, led by my guest today, the Nobel laureate at MIT, Professor Bob Merton. Bob, thank you very much for talking to us here today in London.
Pleasure to be here.
Let's start by taking a look at this really rather fascinating chart which you've produced from your research, showing the interconnectivity of credit entering the credit crisis. Black lines here represent governments and their guarantees, red lines are banks, blue lines are insurers. Take us through how you derived this chart, what it's telling us about the interconnectivity of credit.
Well, as you look at the chart, you see all these lines of different colors, and what they're reflecting is a comparison of the impact of the credit of, let's say, a government on a bank credit, or in some cases banks on the government's credit,
right,
as a result of these guarantees, one guaranteeing the other or the other guaranteeing it, in some cases each guaranteeing the other in a kind of a mutual guarantee. And these are demonstrating how the credit connections are at a point in time prior to the crisis.
Now let's take a look at this map, which you've also produced using the same methodology, of where we are now, and it appears to show a credit system that is even more utterly interconnected than it was entering the crisis. How has that happened, and should we be as alarmed as many of us might at least?
Well, I think the purpose of this is, you could imagine, with so many banks, so many insurance companies, so many countries, all these interconnections, there's a huge amount of information here. So that first, before the fact one you saw, encapsulated in one picture all those data.
Yeah.
You saw the intensity of that.
Yes.
Now you've looked at the one in the crisis. You don't need to look at any of the math to see how much richer and deeper it's become. What is that telling us? That there was an enormous increase in the degree of interconnection of credit among all of them. And what are the implications of that is, in itself, that may not be bad, but it does identify greater potential vulnerability. That is, if shocks hit the system, the more greater the connectivity, the more likely that it can flow back and forth through all kinds of different paths that we wouldn't necessarily normally know. So the way to read this is, it's telling us different condition, materially different condition in terms of the vulnerability of the system, and where those vulnerabilities lie most intensively.
And presumably we've seen this acted out most directly in the Eurozone in the last few years, where we've discovered that a large bank's guarantees are very similar ultimately to a government's guarantees, that they're mutually
Yes, because in the case of, one way to think of it is, of course, we know sovereigns, the governments, have guaranteed banks, either explicitly or implicitly, but every time a bank buys the bonds of its sovereign, it's also taking the credit risk of its sovereign, and therefore is, in a sense, guaranteeing the sovereign. And what these lines have shown you, the picture is the potential for what's called feedback, where one of either the sovereign gets into trouble or the bank gets into trouble, causing the other to become weaker because the guarantee, which then causes the original one to become weaker, and you get feedbacks of a kind that can, of what we saw happen in Europe, all across even the geopolitical borders of Europe in this debt crisis.
Bob Merton, thank you very much indeed for talking to us today. I think the takeaway from this, we appear now to at least be building a map of those troublesome feedback loops in the credit system. There's an awful lot more work to be done on working out, now that we have a map, how we navigate our way through.